Hey guys, what's going on? In this video, we're going to break down specifically what is going to happen in the market in the next 5 days. Now, let's be honest. When you look at this chart, what do you see? Guys, I've asked a bunch of traders, what do they see when they look at this chart, especially after this week's trading, and they're saying, Leo, are you kidding me? Of course it looks bullish. Look at this golden cross. Leo, I watched every video on CNBC. They're saying it's bullish as hell. Guys, the market is about to crash. The crash begins tomorrow, February 17th, and is going to continue for 5 days in a row. Possibly, it could cut short, maybe 3 days, 3 trading days in a row, but anywhere from 3 to 5 days. In this video, I'm going to show you exactly how this breakdown is going to work out. Special announcement for anyone out there that trades with an account of 100K plus. We have a special challenge. 100K to 500K trading with 13 Market Moves Coach in the next 5 days. That's right. The phone lines are open, guys. You can schedule a call by visiting 13marketmoves.com. This is a challenge for a guy with a 100K account or plus. If you got 200K, take a challenge. 200K to $1 million in 5 days with 13 Market Moves. Conditions are simple. If you don't make 5x on your account, trading size, 100K plus in the next 5 days, we will give you all of 13 Market Moves courses for free. Now, if you do make the money, call Mike for all the details of what you'll have to do on your end. Now, let's move on with the explanation of the video. You have till 9 a.m. tomorrow to sign up. February 17th by 9 a.m. That's the challenge. By February, let's look at by February 24th. So the challenge days are going to be 17th through the 24th, which would include tomorrow as a Friday day, as a trading day, plus another 5 days. So basically 6 days if we include tomorrow as a trading day. All right, guys, let's roll to the explanation of the market crash. Now, the reason you're thinking, okay, Leo, if you're going to tell me everything in this video, why would I even want to sign up with a coach? And why would I, guys, because most of you, okay, don't have the balls to trade the crash the way you're supposed to. That's why if you try to trade this crash on your own, chances are, you can make a little bit of money by full information in the video. You're not going to make $1 million. You're not going to take your account on your own from 100K to 500K. Because your emotions will fuck with you. And so, as in any crash, you have to understand that things are not just going to drop in one fucking straight line. They're going to drop, they're going to bounce. You're going to stare at your screen, you're going to look at your profits evaporate, and guess what you're going to do? You're going to jump the fuck out of a trade that could have made you a lot more. Why would you do that? Again, because market will challenge your emotions to the max. So you think you're ready? Probably you're not ready. You think you can do this on your own? Probably you are not going to be able to do this on your own. Now, the difference trading with a coach is, as I train most of the coaches here, especially if you trade with me, I can tell you one fucking thing. We going to stay with the strategy 100% of the time. We short the fucking bounces, okay? There is a playbook involved in trading a market crash. This is not a simple, hold your trade kind of week. This is not a simple, just buy this strike and hold it and never sell it till next Friday. This is not how it's going to work. If you attempt to do this, which is normally I'm a great advocate for when you're taking a trade, stick with it. Don't be jumping in and out like a little bitch. Okay, but the way you trade a market crash is different from the way you would normally trade the markets. So first, let's address the clear concern of you're listening to a lot of media out there. You're probably thinking, Leo, how is this any sort of condition for a market crash in the next 5 days? Well, let's just make this very, very simple. Okay, let's take a look at the chart of Amazon. What do you see here, guys? Well, if you took the charts diversity course, you clearly understand that this is a head and shoulder. This is your head, which represents what? A top. It's a fucking top, okay? You got shoulder 1, you've got the top, you've got shoulder 2, okay? After that, guys, you get a drop. Anywhere from 10, 20% drop is in the making here, considering the pattern. Now, let's take a look at the chart of Google. Wow. Like, Leo, I thought you just showed me the same chart. No, this is a different chart with the same formation. Shoulder 1, it's a fucking top. Shoulder 2, what happens next is a follow-through drop. Okay, Leo, you show me all the technology stocks. Show me something else. Okay, how about me talking about all the oil stocks? And guys, separate video on that. Okay, for example, PXD. Now, the reason I'm bringing the sector associated with energy and oil is because everyone in the fucking world has been bullish on oil. So don't miss actually the next video I'm going to break down. Could be a little bit entertaining as we're taking a look at what some analysts on oil have to say. So basically, there's nothing bullish here. Okay, if you take a real good look, there's two head and shoulder patterns here. So focus 1, here's one shoulder, one top, the other shoulder. Look what happens next. It's a fucking drop. Shoulder 1, top, shoulder 2. Guys, we have told you last week. I specifically devoted an entire video talking about natural gas correlation in relation to the all charts correlations and so on. And I specifically said, look, sometimes correlations are running really thin, which means they lose their momentum. Like the correlation could be 99%, all of a sudden it's like at 10%. So where things are just not that much correlated. Actually, exactly 13 days ago, on a Friday, we've nailed a killer trade on about a 40x trade on oil. And I mentioned in that video that even though oil had a huge drop, like a 6-7% drop in one day, that PXD and other oil-related stocks, they did not drop, okay? But just because they had a small correlation to the oil prices that day does not mean that that correlation is entirely gone. On certain days, like yesterday, when the market is just not doing shit, it's not moving higher, it's not moving lower, it's just not fucking doing anything. The correlations run thin, but it doesn't mean that they're gone entirely. As clearly, oil struggles to move higher on some of the greatest positive catalysts, and what do we get? We get a fucking drop in all stocks. Look, this was a 5% drop a day ago. This is a follow-through drop today. Clearly, I mean, we're getting close to this level. I mean, I wouldn't be shocked if PXD, Pioneer Natural Resources, one of the big heavyweights in oil and gas here in the States, if it would actually test this 200 level. Guys, it's a big move for an oil stock. For a technology stock, it's nothing, but for an oil stock, it's big. So we're taking a look at Amazon and Google. You see head and shoulder. We'll take a look at an oil stock. You see two head and shoulders. Okay, so just to confirm the material. Okay, let's go look at. Wow. Well, let's look at the heavyweight champ of all oil stocks, which would be the Chevron. Of course, Warren Buffett's been buying it. Well, fuck. Guess what? Maybe he ain't buying it anymore. Maybe he's fucking selling, and you're about to find out about it in the next few days. Just like you found out today. Oh, everyone's bullish on semiconductor stocks, but Warren Buffett is fucking selling? Well, he can't be selling at the top, can he? Well, of course. I mean, what the fuck do you expect? If Warren Buffett is selling, guess who else is going to be selling? 90% of the banks on Wall Street are going to be selling. Only about 10% of banks on Wall Street are going to be like, well, Warren Buffett is wrong. Yeah, good luck with that shit. He's wrong occasionally, okay? As we pointed out in the crash of the Corona crash, when he was liquidating all the airline stocks, which he was just buying right ahead of the huge crash in the stocks of airline industry, which we were heavily short. So occasionally he's going to be wrong, but damn it, I promise you, he's selling Chevron. I promise you Chevron is going to drop more. And what do you see? Okay, this is not a technology stock, But it's the same information I have just shown you on what? On Amazon and Google. How the fuck can these two stocks be correlated? Please tell me somebody. Okay, I can tell you one fucking thing how they're correlated, and that is the same institutional investors, okay, that are positioning in Google and Amazon. And guys, we can take a look at a bunch of other charts that are synonymous with Google and Amazon, but just to make this video brief, just trust me, if you look at other fucking charts, they're gonna show you the same fucking thing right here. Okay, what is this? It's a top. It's a resemblance of a head and shoulder formation. Not so perfect on this particular chart, but guys, I've seen some charts like this, okay, where this shoulder is actually lower than this shoulder. It produces a much severe drop percentage-wise, okay? I mean, don't expect this thing to go from 160 and 120. I mean, again, this is not a technology stock. This is this thing drops another 10%. It's going to be a huge drop for CVX. 10% drop for CVX would be huge. Another $6-7, guys, that makes you a bunch of money. A 15% drop, which is possible, but at some point next week, that's a huge move. But please, guys, just because I'm giving you examples of Amazon and Google and Chevron, don't go short that stuff tomorrow. Okay, there's like trades that are 50 times better than these trades. I'm just saying, look at the patterns. It doesn't matter which sector we look at. Okay, well, okay, Leo, you've shown us only two sectors. Okay, fine. MDGL. Now, what the hell is the MDGL? Okay, whoa, Leo, oh, yeah, you weren't signed up to the alerts on December 19th, were you? Oh, Leo, man, whew, somebody paid for their house. Somebody bought 2 houses with that. Somebody paid off all of their shit with this trade we gave them back then. Anyways, here's the deal, guys, okay? Even crazy stocks like that are not correlated to anything, okay? It's a drug manufacturer, okay? Used to be a competition for ICPT, which also used to make some wild moves like this. But look, this thing it's stopping, okay? Top 1, top 2, top 3. Look at the lag in the RSI and the last move higher. This shit deserves a short, okay? If it goes any higher from here, it's a beautiful, beautiful short. But please, don't you dare short this without a 13 market moves coach. I'm just pointing out that this thing, if you study the stock, it could have already been normally to like 350, 400 based off the catalyst, based off everything, which we don't have time to talk about in this video. But what I'm saying is, even some of the best of the best of the best stocks with huge catalysts, okay, this is a pharmaceutical company, okay, they can't fucking rally. It's done, okay? This thing is going to be a huge short. Hey, I may record a video live shorting this son of a gun right here. But let's move to some other stocks. Eli Lilly. I'm going to just bring a couple of drug manufacturers to your attention, right? What the well, Leo, that looks like a black candle. Yeah, which you would know nothing about if you didn't take the charts divergence course by 13 market moves. So, guys, this is a fucking top, okay? If you just learn how to read the black candles from the course, like this trade, on this one trade, you would have paid for all of our courses, you would have paid for your car in cash, and hopefully you got some decent to drive. I'm talking maybe like a 100K car or something. You would have paid cash for this thing, okay? So basically, this is a fucking top in a stock that is not related to technology, that is not related to oil, okay? But it is a fucking top. So basically, I can give you more and more and more charts on different sectors, and you're gonna see some kind of resemblance of a top. Now notice, if you've been paying close attention to all the videos I was recording in October, pointing the market bottom at that moment, okay, where everybody was just highly bearish, I have pointed out how things don't necessarily bottom in one instance. First, we had a bottom in bonds. Then we had a bottom in some other sectors. So as I'm showing you these stops, it's the same thing. Things don't not top all at once. So maybe this particular stock topped out like, 3 weeks ago. Some of the other stocks I'm showing you, they just topped out like in the last 10 days. But it's close enough to where you see it's not just one sector topping. And these are very, very pronounced tops. I mean, you cannot mistake this top for anything out there. Do you see what I'm saying? I mean, you can look at almost every chart and identify a top within each sector. Okay, you're gonna say, well, hold on, Leo, but what about the healthcare sector? Okay, well, let's take a look at UNH. All right, UNH. What? What is that? I thought like that would be the one sector that would be like super unrelated to everything else that's going on in the world. I mean, these returns are steady. These returns are, I mean, but you don't have a head and shoulder formation here. But look, this is 2 bear reversal candles here after a triple top right here. It resembles another triple top. Guys, this stock is going to go lower. All right. Now, again, don't be trying to short any stock. I'm picking these examples randomly. I just want you to see it that, okay, some of these things that have topped out within the last 60 days, some of these things, they clearly show more signs of more of a recent top. All I'm saying, it's a top. It's a fucking top in the market. REGN. Okay, so guys, all of this is unplanned. I'm just randomly putting the stickers from different sectors, okay? So what is this? How's REGN related to any technology stock out there? Yet the chart looks identical. Let me just rewind it back. Okay, whoa, Leo. Okay, let's do something else besides Apple and Google. Okay, fuck it. Let's do Microsoft. Oh. Well, if that ain't a fucking top, guys, leak. But Leo, it's an AI. Everybody's buying AI. Yeah, based on how they're buying it right here, there's a lot of fucking selling above 270. So I would short this thing, okay? Guys, enough bullshit. From 220, disappointing earnings report, not so great guidance, all the way to 274 level on AI bullshit? I mean, come on, guys. Like, this is a fucking top. So when you look across a variety of sectors, variety of stocks, and you can see clear top information, which again, if you don't understand how top information looks, take our charge divergence course. Guys, don't trade without it. This is easy, basic stuff that you can learn within a few days, okay? You don't have to go to school for a year or 5, 7 years, okay? We have guys that do that and never made more than $100,000 in their life. They come to 13 market moves, okay? Now they're working with a $700,000-$800,000 account. So the skills are basic. Like, you can look at this, you can understand this, okay? So I've shown you multiple sectors stopping. Everything looks like it's got a ton of room for the downside. So you may be confused, like, okay, well, why the fuck is the market not dropping then, Leo? Why is it not dropping, man? I've been buying puts all week. I'm fucking losing money. Because markets don't necessarily function on your time. But when you do nail the timing, you get paid huge. If you study the 13 market moves and you work our program diligently, there's going to be moments where you're going to be able to nail 20x, 30x, 50x trade. Okay, it doesn't mean it's going to happen every single day. So for the purpose of this video, we're talking about a market crash. I have just shown you one element. Now, this is just one sign. Guys, this is just one sign of a market element, of a market structure that tells us the next move is not higher, the next move is indeed lower. Now you may be thinking, okay, well, why is this move going to begin tomorrow on February 17th? Well, so actually this is a very good question. So I'm going to give you a few scenarios of an explanation for this. Number one is this formation right here. This is a clear top information, guys, with a bunch of bear reversal candles. You may or may not be able to see them clear, but there is some significant candle formation here that tells us that market is really struggling. Now, to put things in other words, the market right now, as far as short sell is concerned, everybody thinks the market is going to 4,300. Okay, and those guys that would love to short the hell out of this market, they're waiting till the market is going to reach 4,300. All the people that missed on the move when we were posting bullish videos right here in October and November, when market was dropping, we were buying calls, market was dropping, we were buying calls. All the guys that missed this, okay, they are just now convinced, right? Because they're like, well, shit, it's just not dropping. It's not dropping. It's not dropping. I'm going to go buy fucking calls. So we finally reached this point in the market where an average trader is saying like, hey, I'm going to buy calls. Perfect. This is the moment we're waiting for to actually buy puts, okay? Now, we could be off by a day or two, but what I'm saying is this is the moment. Because as bullish as this momentum has been, which we accurately pointed when everybody was bearish in October, okay, we're pointing this factor out right now that 99% of the fucking people are wrong. Basically, as they were wrong in a historic example, which I'm about to bring to your attention on a chart and specifically breaking down in little pieces from February of 2018. Now, there's not a whole lot of things that are similar from the standpoint of the Fed cycle and a lot of other things, but one thing that is similar is the VIX, which we're going to take a look in just a moment, and not necessarily the VIX numbers, but the VIX formation. So as far as the S&P goes, most of the people, the reason the market has not been able to drop over the course of the last 2 weeks is because most of the people got so bullish and convinced that the market can do no wrong, it can only go higher to 4,300. Most of the people have bought the market just now, meaning that most of the fucking people got bullish after the market broke above 4,100. Well, as you know, it didn't go very much beyond that. The highest level was about 4,180. So within those 80 points, from 4,100 to 4,180 is where most of the fucking people got bullish in the last 2 weeks. And imagine being a bull in this kind of circumstance. If you're holding any calls, you're getting fucking killed. Okay, so you're wondering like, man, I thought the market's going higher, and you're sitting there fucking buying calls. Everybody's bullish. Every media you turn on, they're fucking bullish. They're bullish. You're loaded up on calls, and then you sit there for 2 fucking weeks, and the market just won't break higher. It won't break higher. It won't break higher. It won't go any fucking higher than 4,180, which if you were a paying member of our alerts group, okay, you would have known that 4,180 was the fucking level that we were heavily short. So at this point, you're thinking, okay, but couldn't we go sideways for a little bit longer? And that is the most valid point until you go to this part of the technical analysis where the MACD just made the fucking bear cross. Thank you very much. I rest my case. The next move is lower. As a matter of fact, when you are going to open up tomorrow at 9:30, your trading account, we're probably going to gap down 20 to 40 points just to start off the day. And that is the very moment where all the people that have been bullish the market in the last 2 weeks, expecting the market to break the fuck out higher, this is exactly the very moment where they begin to unload everything they have bought, because they can no longer stay in the pain. They were okay when they were breaking even. They were okay when they were making a little bit of money. They were okay adding some more on the way higher, and now all the shit is reversing. And when they're going to see the market get the fuck down lower tomorrow below 4,100, they're going to begin selling. And that selling is going to accelerate. And this is how the market begins to crash. Now, let's take a look at the exact historic breakdown of what's about to happen next. I'm going to show you one chart, guys. If you're tired of looking at charts, you're like, Leo, I'm falling asleep here, man. I already ate my popcorn. Please just tell me what the fuck is going on. Okay, so here it is. So there it is. Whoa, Leo. That doesn't look like the other charts you just showed me. Damn right, because it's exactly the opposite. They have a negative correlation. If you've been paying any attention to the videos I've been posting recently, I said, look, we've nailed the top right here. This part of the chart looks like the rest of the market right now. This part of the chart looks like the bottoms I've been pointing your attention to in November, October, when the market was bottoming in various sectors. So this is a bottom in USD. I know this is not a popular call, but short term, we're bullish on USD. So tomorrow, we're likely to have an outsized move in USD, which could take us all the way to the 105 level. As you can see, the handle reads right now 103.79. It's small, just been going through the consolidation right under that blue line, and we just broke out of it yesterday. Guys, the market didn't do anything. It was one of the days where the market should have corrected strongly, but it didn't. They held it for another day. Yesterday, they held it for another day. Today, on the 16th of February, tomorrow is the day where dollar makes a gigantic move. And you know the trades that are associated with that, guys. Let me just remind you that gold is negative correlated to USD. So you probably saw our 100x trade on gold. Depending on when you got in, you might have not made 100x, but you probably made 10x, 20x at least. And so the pattern is going to continue until gold is probably going to bottom right here at about 783. With the market crash that we're projecting over the course of the next 5 days, I would not be shocked if briefly gold was to drop under 1783, maybe like 1760, 1767 area before it bounced more. But clearly, I mean, we've nailed the top on gold. Some of our Australian guys that are on a different time zone, you know, I never sleep, so I'm glued to the markets all the time pretty much, but we've nailed it right like within $2 off this stop. Look at this beautiful trade. So it's still got room to run, because what we call is the base of this formation, the top. Okay, this is identical to the top in RAGN, Microsoft, Amazon, Google, all the other stocks I've shown you. Now, we're talking about gold. What the fuck gold's got to do with Microsoft or Amazon or Google? But yet, it is an identical chart, identical formation, okay? And gold has corrected a lot more than a lot of other things. So I would say we don't have as much room in gold to correct as we do have in some individual stocks. So, but we still have plenty of room for you to make some money. So sign up with a 30 Market Moves coach by 9 a.m. tomorrow, and let's roll. So going back to the DXY chart, guys, over the next 3 to 5 days, we could see an overshoot in USD, DXY, all the way to probably 107. And this would be the time frame where, this would be the level where we logically, okay, should stop being long the dollar, and at that point we would be buying the market. Okay, so if you still don't understand the correlation between this one chart and all the other charts, guys, it's a problem. It's a problem that you need to address, because I've been stressing this message loud and clear in many videos over the last few months. And if you still don't understand this, guys, please don't trade. Don't trade another day till you get a better grip on this basic stuff I'm trying to explain here. So if you want to get better at reading this, understanding this, please take all the courses, sign up. Just don't waste another day as a trader without understanding this stuff. So basic stuff, okay? Dollar is at the bottom, okay? Gold still have room to go lower. At the same time, we got crazy bearish shit on all energy stocks. And yet we have analysts calling for a move high in energy. The only way energy goes higher if we get maybe an acceleration in war with China or something. Other than that, World War III has started fucking a year ago, okay? And oil prices temporarily did shoot up. But at this point, I mean, the story is, don't get me started on the shit anyway. I'll discuss it in a separate video, okay? The whole basis of US printing money for 30 fucking years, inflation reduction bullshit and all that. Guys, it's a whole nother subject for another video. But the question is, what are you going to trade tomorrow? And how are you going to trade it? And what strikes you're going to pick? And when you're going to pick your entries? And when you're going to pick your exits? And are you going to stay strong enough if the trade goes against you? Are you going to jump out like a little bitch? All of these things are going to determine whether you're going to be able to take your 100K account to $1 million, when you're going to be able to take your 5K account to 100K, okay? Everything is possible in the next 5 days. Everything. Your dreams as a trader, they can come true. The question is, are you mentally ready? And I'm not saying like mentally ready. People sign up and they start trading with me. The moment trade goes a little bit more red than they're mentally prepared, like they're done. Like these guys that they jump out and I'm like, dude, why did you jump out of the trade? But Leo, it was going red. I couldn't take it anymore. I like, okay, so tomorrow that same guy that jumped out of ENPH puts this morning when it was bouncing, that guy could have made a real paycheck from 2K to like 40K. Instead, I mean, he jumped out of the trade at the worst possible moment, and so his account probably is like $300 instead. So don't make those fatal mistakes of misjudging. And I don't know how the fuck can you misjudge this, okay? We continuously short the hell out of ENPH. I mean, can you find one fucking bullish thing here? Why would you jump out of these puts? Give me one fucking reason why you would jump out of puts on this trade. If you're holding puts, okay, you're going to say, but Leo, look at this white candle. Oh my God, it was moving higher. I got fucking scared. Like, listen, the only way you would jump out of this trade if you have other trades that are just like, look, you know you're going to make maybe 20x here, but you're eyeballing some other trade and you're like, holy shit, Leo, this is an 80x trade. Yeah, okay, fine. I maybe sell half of this, jump with the other half in an 80x trade. But when the chart is that beautiful from the short seller's perspective, why would you jump out of this? Give me one fucking reason. Don't do it. Don't do it unless you have a better setup than this. And it doesn't get a better setup than this because just like with all the charts I've showed you, what is this? This is a top. Okay? Shoulder one, top, shoulder two. The next thing is we get a gap down. Tomorrow you wake up, this shit is going to be under 200. Okay? And you're going to be, wow, Leo, why did I got scared over here? That's why you need to trade with a 30 market moves coach. Okay, and even if you trade with 30 market moves coach, if your balls are too small, you're still going to jump out and you're going to cost yourself some profits. So if you're ready to face your fears, guys, if you're ready to trade the crash. By the way, let me show you one chart that is not recent that I believe is highly reflective of exactly what the market is going to do in the next 5 days. Okay, so here's the chart, guys. This is a history quick lesson right here for those of you that care to understand more things about the markets. So the question is, Which part of this chart resembles the current market condition? Is it, let's call it part A? Is it part B, part C, part D, which part of this chart? What do you think, guys? I mean, clearly I'm expecting a crash, so it's gotta be here or here, baby. So there were two big crashes in 2018, which you probably don't remember because you didn't make any money when they happened. This is where you probably blown your account. Well, this is where 13 Market Moves made a shitload of money. Look at this. This is your beautiful tornado pattern. I've shown you guys this tornado pattern so many times. 1, 2, 3. The third time undercuts the prior two. Woo, baby. All the way for Christmas. Beautiful. Predicted pretty much every day of the 13 Market Moves, day by day right here. That's how you make a bunch of money. But unfortunately, this is not the instance of the crash that we're going to have in the next 5 days. We're only going to have this. And this is a huge opportunity from the standpoint of a round trip trade, guys. Round trip trade, okay, you basically short the market right here. Let's say you have 5K in your account. You ride it to 50K all the way down here. Then you reverse the trade into calls, which I'm going to tell you exactly when that's going to happen if you're trading with me. If you're trading with another 13 Market Moves coach, they'll tell you exactly when to nail this part, to reverse into calls and take that 50K potentially to 400K, possibly even 500K on that bounce. Because all of this stuff, look, it looks like a one-day thing here, but in reality, this is what was happening in February of 2018. And it was actually happening over a course of 5 days. 5 days, the crash began, as most of the crashes begin on a Friday. Okay? Friday, not a whole lot of stuff. So some of you may be watching this video tomorrow, be like, okay, the market is down a little bit. What's the big deal? Okay, but watch what happens next. Okay? It's the following 2 days of the crash that produce the biggest drops. And then maybe it could be a bit hard to see here, but there is a black candle which represents a lot of bullish action on this day. So you couldn't hold your position. You'd have to jump out, have the balls to reshort the bounce and collect all the way down here. So even though it appears like a straight chart lower here, it's not the way it appears on a long time frame chart. The way it actually works, there's going to be drop, bounce, and you're just going to be tempted to jump out on every bounce. And that is the part that can deplete your account. If you jump out on bounces and then you see the market reverse and drop again, guess what? You're going to short the bottoms of the day and you're going to cash out on the bounces. Guys, that's not a strategy to make the money. So, and emotionally, your emotions are going to run so high, you're going to be, look, on every bounce, you're going to be jumping the fuck out. So to avoid doing this, you need somebody to just stay there with you and tell you, look, don't fucking do it. Okay? Just don't fucking do it. Be strong, stay patient, focus on the bigger move. That's how you make a bunch of money in a crash. And you gotta be accurate. You're not gonna be accurate 100%, but close. You're not gonna be able to short every point of the move perfectly. But within 10 points, when markets are moving like this, guys, it pays you a fortune. So this is about what we're gonna see. And when everybody on CNBC is gonna be saying, oh my God, this is gonna be this, we're gonna be like, look, perfect. At this point, everybody in CNBC thinks it's a real crash. We're going to start buying calls. And this is the point that most of the traders miss, because at this point, it looks like the whole world is going to end. At this point, it looks like, oh shit. Okay. And you got to be ready, because this is going to be a 3 to 5 day drop, not a straight drop. Again, it's going to have some bounces, and you got to understand and decipher which bounces you short, how big of a bounce you could possibly get, and that sort of thing. And without letting your emotions impact your trading decisions. So remember, we're going into a dip. This is a correction. This could be a 5 to 7% type deal. Okay, 5 to possibly 10% drop within 3 to 5 days, and then the market's going to bounce like crazy, and you're going to be still tempted to short it, and you're going to be still tempted to do a lot of things. But overall, okay, it could take a little bit of time. Notice, once that thing settles in February, okay, we're predominantly like, yeah, there's some shorting opportunities, there's some good stuff going on both directions. You could make money. But like overall, we're just sort of going nowhere from February to July. And then we'll go slightly higher in August, September, October until we get the real deal crash. So people are going to think this is the fucking crash. In reality, we can drop. They're going to buy up the fucking market. We're going to go higher from there. It could take months. And then we can get another major move. Now, considering the conditions, like I think maybe a few more economic reports, we're going to see some wild stuff. I'll talk in a separate video about this, but we may not have to wait for this to happen for another 10 months. I mean, this time around, this part could be happening much closer to maybe this area right here. So guys, this is the breakdown of what's going to happen in the next 5 days. Don't try to trade it on your own. Sign up. It costs you $1 to trade with a 13 Market Moves coach. It's a special that we're running. We don't run it all the time, but look, take advantage of it. If you're struggling with some entries, exits, if you want to partake in this 100K challenge to 500K, make sure you talk to someone here at 13 Market Moves by tomorrow morning, 9 o'clock. I hope everyone makes a bunch of money in the next 5 days. We are on a mission to take 44 traders this year from nothing to $1 million plus. If you want to be one of those 44 guys, this is your fucking chance. Let's roll. I'll see you guys in the next video.